What is up, MOT? This is MOT Finance, MOT Crypto. It's been a couple different names as of lately because our co host, Malcolm Reese, has been out there in the gutter helping out in the National Guard here in Ohio. Malcolm, what's going on, man?
Uh, Lots going on right now as far as where we are in the world, but I'm more than excited to finally have rejoined the MOT community. I've learned a lot of important things on this mission, but the biggest thing that I can take away is that group work together is essential, especially in our world today with where we are heading in the labor market and how there is a huge lack of employees, and there's a whole bunch of supply constraints and just so much confusion, and also fear in just the overall sustainability in the workforce. But if there's something great to understand, is that it won't remain as bad as it is now, and I'm optimistic that we will eventually recover. So that's one of the greatest things I can take away from this mission, is that it was a very worthwhile experience. And
Yeah,
yeah, that's what I'm doing.
yeah, man. That's what's up. I'm glad you're well. I'm glad you're back. I'm excited to have this show with you today. It's going to be an interesting one. It's going to be different than what those who tune into MOT Crypto, MOT Finance have been getting lately, just because I cover solely crypto related topics. And now we're going to be doing what the show was intended to do from the beginning, blending traditional markets with the new crypto markets. So,
Yes.
yeah, we'll give it a little bit here, let some people trickle on in, So, um, yeah, man, it's as you said, I am optimistic for the future too, and there are some crazy times going on right now.
Yeah, that's an understatement.
Right, right. Yeah, man. Like, the important thing to remember though is in chaos there's always opportunity. When
Oh yeah.
there's Yep, when there's times like this that we live in, people get either pessimistic and fearful, or those who can see the opportunity become optimistic. And MOT is very optimistic because we see a huge opportunity here in media, and we are going to take it by storm. That's the freaking goal, man. Honest media.
Yeah.
We have no agenda to push you. We're just speaking our minds. We're speaking what we believe to be is true. We will never lie to you, but we may be wrong. We have been wrong. Not a lot though. We're right about a lot of shit. Just to brag about ourselves for a second.
Brag away, man. I mean, a lot of the information that we receive, of course, we do our thorough research, and we always make sure that we fact check everything that we talk about, because the code of conduct the personal moral code of conduct that I live by is, I'm not going to tell you something that I'm uncertain about. Okay. And if I am uncertain about it, then we both can learn something collectively together, because it's a team effort. It's a collaborative effort between both parties involved. So we're all here to learn and grow each and every
Yep.
single day. So, you know what I mean?
Yeah, man, for sure, for sure. So, why don't you get us started? What's going on in the traditional finance world? I know the stock markets, if I'm not mistaken, Mick had made a comment in our Telegram chat that it's doing pretty well right now, surprisingly.
Yeah, so the stock market is doing pretty well, and it's rebounding from Thursday's 2% drop in all three of the stock market indexes. The Nasdaq actually closed at a 1.64%. The S&P 500 closed at a 2.24%, which is really good. In addition to the Dow Jones Industrial Average Index, tech heavy, of course, closed at a 2.51%, and these are rebounding from basically recollecting the gains that were lost essentially from the day prior. So it didn't make that much of a huge movement, but there still is definitely a candlestick that indicates that there's definitely some room for some price action to go. But a lot of the concern was around, of course, and I normally don't blend politics with the markets, but in this case, it's unavoidable with the vast majority of the stories that I have here. But it was an association with the Russian Ukraine crisis that has been happening. The stock market has been primarily moving because of a lot of investors' fears with the already existential issues of inflation. Then you have the Federal Reserve also doing their their rate hikes, of
Mhm.
course, that they plan on implementing one of them in March of this year, so next month. But that also might be adjusted as well. But that's I'll actually expand on that in a later story shortly. But also with the fact that they used to have these supply constraints, and then on top of that, you have the labor market not reporting as many jobs as an analyst initially expected. As far as that's concerned, still somewhat good sentiment that workers are returning back to work, but not good enough for the economists, of course. And the consumer price index has also reflected that 7.5% inflation. And that's only what they chose to tell us, of course. Who's to say
Right.
that it's a little more higher than they
Well,
wanted to
on that
reveal?
note, just to add in there, the CPI, which is what I believe they go off of, the consumer price index, is just literally a basket of goods and how much they have risen over the course of whatever period of time they're measuring. And that does not account for the real inflation that you feel on houses, on cars, on anything else that you really want to buy. It's just food. It's just primarily food. And so that it's very misleading, inflation, the way they portray it. It's much higher than the 7% or whatever they claim it to be. I don't remember what you exactly said, but yeah.
Of course, and there's confounding variables. There's outliers that don't quantify in this particular consumer price index. Like for people that are overseas, they don't specify, they don't really qualify in this index because
Mhm.
they're weighted in a different average index for some reason. So these are domestic consumer resources that are being used. Like energy was when I read the report, energy amongst it was food, it was energy, and I believe it was utilities, I believe, or
Mm.
something of the sort that were the most highest in terms of what they rose inflationary data as it showed. It actually outlined that. Actually, so I can be specific because I actually have that information right here. I want to be specific here. So outlined, you have yeah, a vast majority of the resources were on food, but even then, now that's going to change, in my personal opinion, over the next few months, considering the economic issues that we're facing right now. So even that within of itself is subject to change dramatically as consumers become more cognizant of their finances and begin to scale back on their monthly expenses due to the fact that they're paying more for the goods that they purchase on an average basis. So that will definitely reflect, especially as inflationary prices start to kick in at these supermarkets and these retail and wholesale stores as well.
Right. And another thing that's really affecting it is not just so much the money supply, but as we've talked about before, the supply chains. Supply chains crumbling essentially because they're global. Has a lot to do with why prices are going up and shortages are happening. We can go into other reasons as to why, but we don't want to deviate too much.
Of
Something that you
course.
touched on that I also wanted to mention was the lack of job growth. One thing that I believe is not reflected in the current job market, how they measure it, and I could be wrong. So if somebody knows this to be incorrect, what I'm about to say, please feel free to correct me. That is, I don't think there are a lot of people, obviously, a lot of people aren't working, but I feel that there are a lot of people that are working that just will not be included in the job force as it's currently measured. And what I mean by that is when you look at the crypto space, there's DAOs. There are people who are making NFTs. There are people who are making cryptocurrencies. Call them scams, call them Ponzi's, whatever you want. But these people are actually working and making money and potentially, in some cases, making other people money. And with the DAOs, for example, they're decentralized autonomous organizations. And so, where's the real structure for that to say, hey, I started a business, but it's a DAO. So, like, nobody really owns it. We all own it, right? Like, these things right here, I believe, are not included in the current measurement of the amount of people that are in the job force.
You're absolutely right, actually, on that, because within the index within of itself, there's certain parameters. So there's non-farm payrolls and farm payrolls. So basically, private businesses, and then you of course have those those public. So the sector and the public sector as well. Those are actually separate numbers, nonetheless, economic data that's also reported. And for those that are 1099 or sole proprietors, they do not, they're not incorporated in this particular category. So it doesn't account for that as far as that's concerned. And a lot of people, well, I won't say a lot of people, but in the past 2 years, people have decided to navigate towards being their own sole proprietor. And then you have to incorporate services like DoorDash, Grubhub, and then several other services that allow people to be their own sole proprietors. And that's an index within of itself as well, because now that since you're self-employed, you're not working under a business, so you don't count under that non-farm payroll as far as being employed, because you're self-employed, which is why when you fill out your taxes, you have that category to fill out that you're self-employed or anything of that sort, because they need to measure that index separately apart from the employment, so that doesn't reflect complete employment. But you were absolutely right to say that it doesn't measure that.
Yeah. So there's a little bit of, I would say, I don't want to call it misinformation, but it's incomplete information that people are receiving through the mainstream media. They're not talking about the fact that a lot of people are starting to open up their own Shopify stores. People aren't talking about the fact that they're not, that they're becoming a crypto trader, which I do not endorse, by the way. I mean, you can do what you want to do with your money. Anyway, I won't go on my rant with what I think about trading.
I wouldn't mind.
Crypto. Well, I guess just
in the interest of time,
trading crypto is not the smartest thing you can do. You're going to make the most money when you hold your crypto. It's proven time and time again. We'll talk more about crypto in a little bit. But yeah, there's just so many people out there right now that are making their own schedules and becoming freelancers. Like, I had this interview, my first interview ever for MOT. First interview ever for MOT was with Thomas Frey.
Oh, I remember that.
Yes, and he had talked about a long time ago, this is almost a year ago now, guys, that there would be the Great Resignation. So we've been ahead of the curve for a long time here at MOT, because now everybody's talking about that. But if you had been following us since the beginning, you would have been like, why are you guys just now figuring this out? Anyway, my point with bringing this up, he talked about the fact that people will become freelancers. This will be the new thing. And something else that he talked about was a change in education, being catered to essentially your strengths. And we see a huge move in that in a huge industry. For instance, I had just interviewed a gentleman who is the founder of a homeschooling business and consulting company. The interview will be released sometime next month or the month after. I haven't decided yet. Anyway, and he talked about his curriculum. And his curriculum is very much in line with what Thomas Frey, who is a futurist, had, by the way, Google's top-rated futurist. Anyway, the curriculum he had described, which will come in the future. This gentleman is actually doing that, and I'm sure he has never heard of Thomas Frey before. This is just something that's starting to permeate the zeitgeist, if you will. And that curriculum is essentially teaching your kids how to market and sell what they like to do. That way they can become self-sufficient as far as bringing in revenue. It can be something as simple as, you like to make memes, why don't you make those memes into t-shirts or something like that? And children are doing this and they're making money from this. And so what we're going to see in, like my children's generation and the generation above them are more entrepreneurial minded individuals in society. And for that reason, it'll become more individualistic, I believe. However, there comes with a lot of downsides to that. So, that's something I wanted to mention. But while we're on the topic of, kids starting stores and people learning how to become independent, MOT, we provide a lot of free content for you guys. And we'll continuously do that. But if you want to help support us, please check out motmedia1.myshopify.com. And you can come here and support us with some of the merchandise we have here right now. It's not much, but it's something, and you can help support us. So
yeah, it's definitely worth it. I just picked myself up a phone case, and I'm gonna be rocking some MOT advertising in a sense, or just overall basically repping MOT here because I love it. There's so much that I can feel confident about talking about, and I know for sure that this platform within of itself carries so much weight, and it definitely will in the future, guys. So trust me, you
Yes,
guys can't do any wrong with getting yourself some MOT merch. It's definitely worth it.
this is true. This is true. So yeah, so there's a huge change in what's happening in the economy. There's a huge change in what's happening in the workforce, and it's not going to be all roses, sunshine, and rainbows. There's going to be a lot of hard times, I suspect. As Malcolm, this is one of your talking points: as inflation increases, spending habits are going to change up drastically, and I think this will cause us to go into a deflationary period, which will be very beneficial. There's a misconception with deflation. A lot of people think it's bad because the economy isn't growing. That isn't good. But the big thing with deflation is it really only hurts those who are lenders. If you lend out debt, deflationary periods hurt you. If you lend out debt, inflationary effects help you. If you own assets, inflationary periods help you. But if you're just in cash and you're just a normal person that isn't into anything like that, well, you're going to have a much easier, you're going to have much more buying power.
Yeah, and then the easiest way that I usually explain that, from my understanding, is that deflationary periods, and I actually argued with you on this on a live that we had quite some time back. I had to go back and go back to the drawing board and look at it and re-look into it. I'm like, okay, I can understand that, and I can understand where you're coming from in terms of deflation. And it sounded very foreign at the time, and I was like, dude, what we need this kind of stuff. Inflation, it was a useless debate, but it was still definitely worthwhile because after looking through it, yeah. So deflationary periods basically hurt the bigger guy, and inflationary periods they improve the bigger guy and gives them more power because if you can lend out at a certain rate and an APR, of course, with interest building on that, of course, you're going to hurt the smaller guy. But when you have more leverage and you give people the more power and buying power, of course they're going to use that to their advantage. You would only hope that they use it responsibly, and that's when it becomes when it comes to inflationary periods a more precautionary stage. Which is why when this inflationary period starts to kick in and consumers start to say, "Whoa, whoa, whoa! I'm going to actually have to redo my finances, refinance my mortgage, refinance my car." And probably reduce my credit card usage and expenditure, and then start finding another store to start shopping at. Instead of shopping at Walmart, start shopping at Aldi's and get the same thing that I can get at another place, but at a discounted rate, and start bargain shopping, or perhaps start thrift shopping or anything to try to save money and try to avoid spending as much money as I once used to, because now I'm paying for things like gas at a higher rate. And of course I'm going to do that. They already know that this is going to happen. Plus people are going to be more frugal with their finances. And by that, meaning they're not going to want to use this kind of money that's given to them by these lenders, because there's going to be stipulations that they will not want to be subject to, because they know it's kind of like they're being trapped, and nobody wants to be trapped. Nobody wants to be trapped, and you don't want to be trapped. Trust me, you don't want those problems. I promise you. I don't want those problems.
Nobody does. And the most important thing that you can do as we enter this inflationary period, well, let me just backtrack that statement. Let me rephrase it. This is not financial advice. This
Of
is for
course.
entertainment purposes only. So I will talk about what I do. I don't have a fucking savings account, guys. I don't. Why would I have one in an inflationary period? I know this is opposite of what everybody's talking about. Oh, you need to have your money. Dave Ramsey, the whole Dave Ramsey idea of save your pennies, don't get into debt. I'm not a big fan of debt. I'm not saying get into debt. But I'm telling you, saving your pennies is not a a smart idea right now. The best thing you can do is throw your money in some assets. Damn it. Don't do that. Don't listen to me. All right. This
I
is
was
not
actually
financial
agreeing.
advice. I know, Malcolm. I have to be careful so
I
that way I
understand.
don't get fucked. Anyway,
I understand.
so what I do is my money is I use Hex as my savings account. Hex is my savings account. So in a situation like what happened in Canada, I ain't got to worry about it, man. My money is not in the banks. My money is owned by me and me alone. And not only that, but as they're printing more money and the wealthy who know exactly what to do in inflationary periods, which is buy assets, they just keep buying more assets. And you know what that means? The prices keep going up and up and up and up and up. That doesn't mean that they won't pop someday. I'm not saying that. I mean, right now, Hex is on like a 70% dip. But as
That's
I've been
amazing, by the
saying,
way.
yeah, I mean,
I
Hex
love dips.
has, yeah, exactly. Dips aren't a bad thing. Dips are in the game. Like, you got to expect that. And this is something that I've been talking a lot about that not many people in the crypto, I haven't heard actually anybody bring up this point in the crypto world, in the crypto sphere, as far as like influencers and commentators, etc., is that crypto, for those who have been in it for a while, train you for micro depressions and micro booms. Because if you look at Bitcoin, every 3 years, Bitcoin makes a new high. But the bull market lasts 3 years, but the bear market lasts about a year, right? And that bear market is fucking brutal. It's brutal. You think a 20% correction in the stock market is a big deal? You think when the housing market dropped by 50% back in '08, everybody was losing their minds. But in crypto, come bear market time, get ready to drop 85, 90%. And if you can stomach that and still buy the dip, I mean, you're rewarded if you have the right coin, if you know what you're talking about, if you know what you're investing, you tend to go up. And the point I'm making here is it is changing the psychology of investors in real time to think on a longer time frame, longer time horizon, and be immune to dips like this. So when the rest of the world is shitting their pants as the stock market crashes, there's going to be a lot of people in crypto who are like, well, we've been, we've gone through much worse. I've lost, not me personally, I'm just giving an example here of what somebody would say entering the bear market, because you see it all the time in crypto. When the bear market comes around, people are worth millions of dollars. Bear market comes, destroys their gains. I mean, now they're
Yeah.
left with maybe 100 grand, maybe 10 grand, maybe 50 grand, maybe no money whatsoever. That is not uncommon in crypto. That is not uncommon. So, there's a huge perk in being an investor and hanging in the crypto market, because your psychology begins to change. And there's a lot of people too whose psychology has changed because they have become suddenly wealthy. Think about the
Yeah, man.
individual. Yeah, it's
That's why it's
real.
about time in the market and not timing in the market.
Boom. You got it.
Because the more you experience the trends in which because, like, first and foremost, I just want to say I'm more than glad that I got into crypto when it was going into a bearish trend, because I was like, oh my goodness, this is great. Because I actually I initially, when you told me about getting into Hex, and you navigated me to get into Hex, I bought in at that 14 cent price range, and now with where it's at, I actually got to get in even more lower than the price that I initially bought it.
12
So I
cents.
put yeah, man, I put even more in. I was like, yes, this is perfect, because now I can do some dollar cost averaging, and on top of that, I can set up myself so that when it finally finishes this bear trend, I'll be set up for success in the future, and I already am, even despite my reluctance before. But now I'm sure, and even if it drops even more, because the thing is that with an investor's mindset, and I also have a trader's mindset as well, because I still have some short-term capital gains that I'm making from my portfolio. I kind of have to change my mindset when I get into crypto, because I have to be weary of the fact that the volatility is always going to be there. And with the market and the way it's going, volatility is most likely going to be the new norm. Even though with one of the stories that I have, it's going to be more regulated. It still is going to be something to consider because everyone wants to make those quick and instantaneous gains. But you got to understand, patience is essential. It is a virtue, but it is essential nonetheless. And when you have that patience and you also have that time in investing, you can gather that patience and understand that when you do see a bearish trend, like with what's happening, and since then, crypto has actually rebounded respectively since Thursday, surprisingly enough, because I saw Bitcoin at like $34,450 at one point, and then now it's above, I think at that 37 range, which is remarkable recovery. But still doesn't indicate a complete in the clear. So we'll see how that goes. But no, when you experience that, I just look at it now. Whenever I see a bear trend, I'm like, nice. I should buy more.
Right. And that's how I feel everybody should view it, especially, I won't say that, but I think everybody should view it in that light. Understand that you can make some losses, but you can make some huge gains. And truthfully, everybody that's in crypto is in crypto to make mad gains. In a byproduct of that is the interest of technology. People are understanding the blockchain, understanding these decentralized networks, and they want to sound sophisticated and say, well, that's why I'm investing in these projects because of the technology. But in reality, you think that these projects are going to make you a lot of money, and there's nothing wrong with that. That should be something people are more open about.
Of course, I mean, everybody has a goal when it comes to getting into investing, trading, or anything of that sort. Plus, I think it's important to educate yourself when you're getting into this endeavor that you're taking on when it comes to just financial literacy in general. Like, I mean, I'm not an advertising and I'm not getting paid for this. I wish we were getting paid for this advertisement, but I will advertise to you this app. It's called Zogo. Okay, so it's Zebra, Oscar, Georgia, and an Oscar, Zogo. It's an app that basically teaches you financial literacy, and you get paid to go through the modules of understanding financial literacy. And I can honestly tell you, I have learned some things that I thought I knew, and I've had to change my shift my thought of thinking in regards to just financial literacy. Because I was like, the things that I thought I knew, I was like, I guess I didn't know as much as I thought I did about that, which is really enlightening because I'm always willing to be wrong. And that's another thing. It's just admitting to yourself that it may not pan out the way that you expect it to when it comes to investing. Because some people, like you said, go into it with this, know it all mentality. And then when they incur huge losses, they're like, well, this is kind of what I asked for, or they don't want to admit that they failed because I was very stubborn. But yeah, Zogo has helped me tremendously, and I encourage anyone that's curious to also get in on that application and start to get paid to earn. I'm sorry, getting paid to learn, because you get to make money into investing into crypto. So like for every module that you complete, you get to put more money into Bitcoin. For some reason, I can tell that it's a centralized app that's being paid through central banks. Actually, that's in the description of the app. But what I do is that it does it through Coinbase. So I just turn that Bitcoin into and I swap it for something else, and I put it on just hold that. It's an interesting process. But yeah, you can repurpose that money or donate to charities. So many things you can repurchase. You can get gift cards as well. But yeah, man, financial literacy is essential as well before you get into it. That's why I had to, when I started losing money and I even got scammed, I actually had to go back to the drawing board and saying, okay, what am I doing wrong? What can I do to correct this? And how can I avoid this in the future? Because I will tell you folks, it can be scary. And I was filled with a lot of uncertainty getting into this, but I feel confident now because now, since I have resources to use at my disposal by being involved in these communities, people to speak with, such as Louise, and also these Pulse Chain and Pulse X group chats, it's been enlightening with a very welcoming community in the crypto and also in the traditional markets as well. So just be wary of what you're getting yourself into before you decide to get into it and jump into it blindly, which one thing I've noticed a lot of people are doing. Well, I won't say a lot of people, but the people that I've observed doing it. And I'm like, no, oh my God, know what you're doing. You know what I mean?
Yeah, and that's the thing that people pay the price for is lack of education, lack of knowing. And you don't know what you don't know. So it's kind of hard to assess your weaknesses when you are so you are such a novice entering the space. And
Yeah.
that's why it's important to do your own homework, do your own research. I wasn't as fortunate say Malcolm or anybody else in the MOT community, because I didn't really have I've never identified really with communities, and I never, was the kind to reach out to people to ask. I would just say, you know what, I'm going to learn this shit on my own. I'll watch videos, I'll read. I read a lot of books on Bitcoin, Ethereum, blockchain when I first got into it. Watched a lot of videos about this stuff, and just a lot of hard work, and research. Not really hard work. I can't honestly call it hard work, but it's
well, I would
it
call
takes
it
a lot
hard
of.
work because it's paying off now, and hard work does pay off. You applied yourself, and
I'm
you
thinking
just
I'm thinking hard work's like, when I go out to the farm or I go work on a car.
well,
That's
everyone has their own definition of hard work. So then again, of course, your meaning will vary from that of someone else's. So I can understand where you're coming from.
well, I'm just talking about actual hard work, like sweating your ass off. Anyway, we
Oh,
don't have to get into a debate
physical
about that.
labor.
Yeah,
Gotcha.
like actual hard work, actual labor. And that really isn't very intensive labor. It just takes a lot of, focus, concentration. Anyway, my whole point with getting into that is we want to try to help people understand the crypto space a little bit better. That way they can enter it at least knowing something. And I don't want to do that by shilling a bunch of shit coins and telling you what to invest in, what not to invest in, what things like that, especially when it comes to crypto. Now, when it comes to traditional markets, it's a little bit different. It's more regulated, and people can still give you bad advice. And I know people are going to ridicule me for saying that, implying that regulation is somewhat of a good thing, because it is actually. It is a good thing. People are dumb who think that regulation isn't a good thing. You need regulation. You're always going to have regulation.
You need
You
law and
regulate
order.
yourself. You regulate yourself to not do certain things. You regulate yourself to do certain things. Therefore, that's going to trickle out into your family, and then from your family into society. And as Malcolm just said, it establishes law and order. So yes, regulation is not a bad thing, which is a perfect segue into. I know I totally did not get to my point, so let me just get to the point there before
Land
I
the plane, man.
segue. The whole point here was basically the reason why people are hesitant to get into crypto is due to a lack of education, and what can help that education is regulation. And if we look at what's taking place in China, oh my God, I might just get so ridiculed for this eventually in the future once more people start watching it.
Right.
Because they're going
Okay.
to be like, this dude segued into talking about being educated in crypto and wanting to help out, and then saying that regulations are good, and then segues into what China is doing by cracking down on Bitcoin and other cryptocurrencies for fundraising with potential fines and jail sentences.
That's
And
excessive.
I don't know if it's excessive. I like China a lot. I like Russia a lot. And a lot of people don't understand those two countries. They don't understand nationalism. They don't understand community. They don't understand their ancestry. And so it's not surprising that people criticize these countries so much for what they do. And as I've been talking about, the reason China's doing this is very simple. I mean, like, first off, let me touch on this. So China is just trying to essentially do a couple things: preserve their sovereignty and help, whether you want to accept it or not, their citizens from getting scammed. Because how many Americans have been scammed? I mean, that's the price of freedom, though. That's the price of somewhat freedom, right? Where, okay, it's just the Wild West in the crypto market. But China is doing its best to prevent that. And now, if we look here, it goes into a little more detail. It says China Supreme Court has issued a ruling that specifies penalties for offenders who use cryptocurrency to raise funds. Penalties range up to 10 years in prison and fines up to 500,000 yen or $79,000. So these are not cheap. Have the 10 years in prison.
Yeah, I was gonna say, like, come on.
Well, we have people like Jordan Belfort, right? He went to prison because he was scamming people.
I
And
can
so
just
there's
imagine a scenario where you get put into a cell next to some bulky big dude, and he's like, "What are you in for?" And you're like, "Well, I was trading some crypto when I shouldn't have, and I was using it for other means than what the government told me to." And he's like, "Oh,
right, right. Yeah, man. So I don't think that's necessarily a bad idea, because what they're trying to do, and I've been making this case for China and for other countries like them that are, well, I don't know of any other country now that's really trying to do it because Russia was, but now they submitted a proposal in favor of Bitcoin. So we'll see how that works, which might be smart for them in the long run, being that the UK wants to get them out of the SWIFT international payment network. But the US and Germany are like, nah, don't do that. Anyway, before I go down on that road, China is trying to preserve their sovereignty. You get rid of your currency, you get rid of where your money comes from, who owns your money, which I know, guys, I know that China doesn't really own its money, the US doesn't really own its money. It's all central banks. We can point the fingers at the small hats, but it's much more than just the small hats. And anyway, we won't go down these conspiratorial rabbit holes.
oh my
Uh,
goodness."
so China wants to preserve its sovereignty, and by doing that, it's going to prevent these third-party, non-state actors to come in there and take over their dollar. Come on, I mean, the U.S. has gone to war over this so many times because they don't want the Middle Eastern countries to be self-sufficient and then tie their currencies to their valuable assets like oil. So we go over there, we topple them, and we say, no, 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 no. The dollar is king, baby. The dollar is king. Submit and give us your oil. Thank you. Bye. Now we're going to actually not buy. We're going to occupy your country for years and years and years. The U.S. does this. So why would China not want to preserve their currency by fighting against cryptocurrency? It makes sense. It does make sense. I'm a fan of cryptocurrency. So you have to understand my position is a little nuanced. Like I think that cryptocurrencies are going to be regulated to the point where they're mostly going to be assets, and those the ones that the way that you can make payments for them are going to be essentially bartering, what we would consider bartering today, where okay, somebody else accepts your Bitcoin, that's cool. Somebody else accepts your whatever coin, Hex, whatever, Pulse X, Pulse Chain, Pulse Token, whatever. But then maybe some people won't accept that. Just like, hey, I will not accept your socks for my eggs. Like that isn't a fair exchange to me. So I think that we're going to have some old school bartering that crypto will fill a hole in, but it's not going to become these big and powerful payment networks. I think the big and powerful payment, it will in a way, but it's not going to topple the government's payment networks. It's not going to topple the central bank's payment networks. It's going to create a parallel network. It's going to expose the parallel net. It's going to enhance the parallel network that already exists. But the network that we all are all on, it will not go away. Because I think what's going to happen is, I'm just ranting now. What's going to happen is probably you're going to have to exchange whatever crypto asset you have for whatever stable coin is backed by your central bank in order to exchange at a mass level. That's what I think.
Yeah, I mean, there of course will be middlemen. Of course, somebody has to profit from your transactions that you execute, and why not the banks?
Yeah,
So I
I
can
mean,
understand that.
yeah, yeah. And it has to do with retaining your sovereignty at some level. And the United States is even going to do this. And if they didn't, the country would in effect not really be a country. I mean, you would lose something that's very uh, binding to the culture itself, and that's what I think China's doing. So it may seem harsh, it may seem tyrannical, but trust me, here in the West, I think that things are a lot worse than over in China. And people will ridicule me for saying that, I'm sure, but things are a lot worse here in the West than they are in China, than they are in Russia, 100%.
And we will have to see. And as I always end with a very neutral statement, only time will tell in regards to that. And transitioning to what's been happening as far as how our oil prices have been affected, I also wanted to just give a brief economic breakdown on just our overall traditional markets and the impact as well as that, because it's been very interesting. So the Russian attack came as volatility in markets was already heightened, and because of looming changes in Fed monetary policy, that only makes the market a little bit of a more volatile jungle for people to be trading or placing secure investments. And with that being said, as we touched on briefly but earlier, the labor market still remains tight, despite weekly jobless claims coming in at 232,000, which is a slight decline from previous week and somewhat of a good indication that people are still going to work. I think at this point, the economists are trying to gratify themselves with saying, we think people are going back to work. I mean, let's hope that people are going back to work, right? Let's just think that's the case, huh? So you have that, but then you have the volatility from the initial Russia-Ukraine crisis that shaked the markets on Thursday, and somehow have managed to rebound from that, all because of, and this is exactly why, or at least what's been talked about on Wall Street is why the indices have rebounded. It's because the tech has been holding it down very heavily on these indexes. Basically, these bigger cap companies have been weighing the indexes in a certain direction, and because of their buoyancy and influence, these are what's holding the markets on a thread. But I believe that it's also because at the time when this happened, you had energy stocks soaring, you had gold assets soaring, and then on top of that, silver mining companies soaring, as well as also electric companies. In addition to cybersecurity stocks, I actually spoke with Zach earlier, and he showed me a cybersecurity company that I actually just placed an investment on. That has been performing because of the alleged the cyber attacks orchestrated on behalf of the Russian part. But besides that, you have the
allegedly.
Allegedly. I don't want to point out any guilty parties here because I honestly don't want to assume here. You know what they say about assuming. And that transitions into these wonderful gas prices that we've been seeing. So here is the inner breakdown of what's essentially been happening. Oil prices soared on Thursday after Russia invaded Ukraine, but oil stocks were not performing as well as investors had initially expected. You had ExxonMobil, which is of course, a gasoline provider. It fell 2.4%. You had Chevron that dropped 1.9%, another gas provider. You have an oil producer, EOG Resources, that fell 2.2%. You had BP, which, by the way, has a substantial operations in Russia, that was down 8%. And many other petroleum companies were also undergoing a slight downward trend at the time, and they're gradually rebounding as these prices per barrel continue to go down. Because the thing is that if the price per barrel, which at the time was over $100, that means that oil is becoming a little bit more scarce. And by that, now it's becoming more expensive because of the scarcity and the lack of resources, which driving the prices up, making consumers concerned. So now it's like, okay, well, if petroleum is as expensive as it is, should I be concerned about the sustainability and in the long run? And the major oil producers are set to meet on March 2nd as Russia's invasion of Ukraine threatens to disrupt tight supplies of crude oil, and Iran and world powers look to negotiate a nuclear deal that would lead to more oil in the market. But it's essential to understand that I don't think they're going to achieve anything from this particular meeting. I mean, despite the fact that their objective is to have a greater expansion of output on schedule of more than 700,000 barrels a day, market prices won't be the biggest concern for investors, as they're worrying about other issues and concern of the Russian sanctions that the Biden administration plans on imposing on the Russian oil reserves. Biden's basically punishing the economy in addition to the Russian economy as well, because he's basically saying, hey, look, we're going to try to sanction you, but in that way, we're also going to screw ourselves and make it a little bit more difficult for me to handle the gas prices issue, even though he's trying to tackle that by getting more expansion with OPEC and trying to establish agreement to distribute more barrels a day. But like, dude, I felt like this is a deliberate attempt to sabotage how we can feel confident at the pump, or how we can have any form of sustainability as far as oil resources go. So now you have the fact that inflation is playing a variable in addition to the scarcity of resources. And then now you have Brent crude, the global benchmark, by the way, it topped over $100 a barrel for the first time since 2014. Prices for its U.S. equivalent, which, by the way, is West Texas Intermediate, also rose. Once again, when those prices per barrel rise, that means it's becoming more expensive to produce, which is something considering. So targeting Russia's oil exports would essentially reduce the supply of crude oil available on the international market, which in this case will cause the price to rise even further. And now you have inflation that is already high, and the Fed that has made it completely clear that it is likely to lift interest rates several times this year, not once, several times this year. You have that, and not to mention reducing its bond holdings in a response. So now you have the Fed saying that they're going to reduce providing liquidity into the economy, on top of high inflation, on top of the scarcity of resources as far as oils. And now they're trying to find an OPEC expansion as far as pushing out more barrels a day, which, by the way, has been under analyst expectations as far as producing oil, which is why they're trying to put together this meeting together to see what they can accomplish. It's honestly catastrophic.
I agree with Nelson here.
Open the oil reserves. Yeah, that's actually one of Biden's expectations, is to open the oil reserves.
Well, why he shut down the Keystone Pipeline? The dude's an idiot. Trump had it right with trying to get us independent, self-sufficient with the oil. I'm not a big fan of Trump. I voted for him in 2016. Did not vote for anybody in 2020. But Trump was right in trying to make America self-sufficient in its oil for moments just like this. And this also, like Malcolm said, leads me to believe a lot of what's taking place right now is somewhat orchestrated. And Malcolm has postulated that it's potentially to segue us into a more green economy.
Yeah, that's what I think too, as well, because you know what's crazy? I've been noticing there have been a lot of EV commercials out lately. I don't know if anyone else has noticed that, but they've been pushing heavily on EVs, and I've been seeing news segments from like local news stations talking about EVs, and they actually just recently installed a Tesla supercharging station at the gas station that they just built. And then on top of that, you have states that are actually making it by law that they can't manufacture any more gas stations. In that the only thing that can go and manufacture, in California is one of the first states to do this as far as adoption goes, is to only build electric charging stations as well, which is really interesting.
You know who's the real hero here? I'm going to trigger all the crypto guys because they're so anti-government. The post office. The post office is buying powered trucks despite Biden's climate orders. They're the real heroes. Everybody, let's give it up for the freaking post office.
Yeah.
They're saying, get rid of your renewable energy bullshit because it's still going to require, you know what? You know what it's still going to require? It's still going to require people to mine the earth. It's still going to it's so dumb. You're going to kill so many birds by your freaking windmills. You're going to kill so many birds by your freaking solar panels, frying them to death. You're going to kill a lot of freaking animals and you're going to hurt the environment, okay? So, like, let's just accept the fact that mankind, humans, are the shit, and we can do what we want on this planet, and we can make it how we want to make it, okay? And we're not going to kill it. We're not going to kill the planet. We're not doing shit to hurt the planet, okay? It's narcissistic to think that. It is. The planet will be okay. The planet will be okay.
Yeah, I agree. I think there's still definitely room for tons of advancements in technology, and there's options that these automakers are also sourcing out as far as more sustainable green energy transition. Like you have General Motors that basically said that by the year 2035, they only plan on manufacturing EVs, and other automotive manufacturers in the same segment also plan on valuing the same thing, as far as that's concerned. And now you also have these smaller businesses like Hertz buying a complete EV line as well. And this transition is too convenient too, and especially in inception of what's been happening economically. And then on, I'm sorry, go
But
ahead.
before we switch over to something else, I
Yeah.
want to say this, that I don't think that electric vehicles are going anywhere. I think that they will be a force in the market, and I don't think gas. I don't think gas or diesel is going anywhere either. I think what we're going to see is a hybrid transportation market, a hybrid energy market. We're going to see EV. We're going to see hydrogen. We're going to see fuel, like regular fuel as we know today. It's going to be a combination of multiple power sources. And why wouldn't it be? Why wouldn't we use all of what we have at our disposal? And so this big fear of, oh, all the fossil fuels, all the gas is going to be gone. We're not going to be able to use it anymore. I don't think that's going to happen. I really don't. I could be wrong, but I feel very strongly that it's going to be more diverse in our energy sources moving forward, especially as we find new ways to store energy and use energy, right? So why would you get rid of an old, like, it just doesn't make sense to me. It doesn't make sense to me that you wouldn't just have as many options as possible.
Well, we'll see if the next administration in the office is Democrat or Republican, and see how they choose to tackle this as well.
Right? I don't think it really matters if they're
I know.
Democrat or Republican. They
It,
are all going to shill to their owners, i.e., the central bank. And who's above the central bank? Well, um, very wealthy people who own the bank, and then
yeah,
probably above
private
that.
banking industries, and you have people such as J.P. Morgan Chase and the board of governors as well that control, or at least mediate, in a sense, the monetary system. Also, the Department of Defense, but that's a whole nother topic for another day.
Yeah. Well, the ultimate is just to go down there a little bit further. Spirituality is what is at the top of all of these little empires. So, yeah, we'll just leave it at that. We'll just leave it at that. Some spirits.
Understood. And as far as that goes with the changes, and as far as oil prices go, as far as the market is also concerned, I've been monitoring the CBOE Volatility Index, which in this case rose to the highest level in over 15 months. It's an indication. Now, for those that are not familiar with the CBOE Volatility Index is, which you can find on the ticker name VIX, it's basically a real-time index that represents the market's expectations for relative strength for near-term price changes in the S&P 500 index as far as options go. It derives from that. And because it's derived from the prices of the SPX index options, it generates a 30-day forward projection of volatility. So the simplest way that I can describe the volatility index, it measures an ahead of time of how volatile the market sentiment could be as far as the market goes with the flow of the market. And it gives an idea of market sentiment for investors that are actually looking into volatility on whether or not they should be careful with their investments, especially if they're invested in index funds as well. So it basically provides a quantifiable measurement of market risk and investor sentiments is the dictionary term of it as well. And that's been achieving highs. So when that volatility index raises, it draws in concerns of those economists and, of course, those analysts as well. But analysts have been missing the projections. I feel like analysts get paid by these institutions to shoot a random target out there. And they're like, well, I think this will do that. They could be absolutely wrong because the market goes a completely different way, which is why the market has actually been implementing more regulatory standards and expectations, because I actually wanted to transition to saying this. For those that the short squeeze rallies that you may have witnessed with stocks like GameStop are short-lived, as the SEC proposes new rules to monitor them. Now, as you know, there isn't much transparency on Wall Street. For that, among many other reasons, is why the Securities Exchange Commission proposed new rules actually today that would expand reporting of short squeeze positions. The agency said that it aims to gain better insight into market conditions, like the January 2021 short squeezes that took place in stocks like GameStop and COS as well. Under the proposed rules, money managers would confidentially report to the SEC only on any short positions that exceed 10 million in value at the close of a day's trading, or which would exceed 2.5% of a company's shares outstanding. The reports would be due 14 days after the month in which the positions occurred. So basically, and there's more if you want to read on to it, read into it. I'll find a way to try to link this into the MLT community as well, because this is actually a very compelling story, which in this case implements more regulation into the stock market. And I think the reason why this particular provision came about is when people started complaining about the manipulation on the market, and in addition to the hedge funds as well that had that orchestrated these particular issues. There was a little bit of a frenzy on the stock market when these short squeezes occurred, because a lot of the short interest that was building up, investors were playing against the retail investor. I'm sorry, corporate investors were playing against the retail investors, and there was a whole frenzy and disillusion in that. And the SEC at the time was not doing absolutely anything, and people were looking at the SEC like, bro, what are you going to do? Help us. Help us. They are taking money from us. They're robbing us. And there just needs to be a little bit more regulation when it comes to shorting a specific asset. And I think that whether or not the SEC will actually police this, and if they're doing this only just to appease the investors and let this continue to go on, I highly doubt this will be enforced. But I do think that it will give a sense of perhaps what's the word? Legitimacy in a sense, for lack of a better term, a legitimacy. But I don't think it'll actually cause any huge change. But they are saying that they're going to regulate it more. It's really interesting. People complain, and then eventually they try to appease the smaller man, because if they lose investors' interests, especially because of things like the short squeezes, people's hope in the fact that asset would actually follow its fundamental trend, it will continue to increase. And especially as the Federal Reserve implements these interest rate hikes and the market becomes a little bit more volatile territory, it's probably mindful to note that what has happened, they hope for it to not occur again. But I personally think that investors will invest as they please, and traders will trade as they please, and always find ways to work around it on these over-the-counter markets and these what do they call them? These, I wouldn't call them black markets. I forgot what the exact term it is, but it's for these businesses to trade their own assets in bigger quantities of shares on a separate market. So these businesses trade in huge amounts of shares with one another on these particular markets. I forget what they're called. Someone can quote me on that. But yeah, that'll also regulate that. So they just want more regulation as far as that's concerned. And I think that was a request made by the investors. And it was also a unanimous vote on this particular provision as well. So people basically said, well, we probably should do something so it doesn't make us look like we're always the bad guy, even though we are the bad guy. So yeah. But yeah, that's basically what's been happening as far as that goes. But on good news with the market, I will say that on economic data today is that consumer spending in January rose 2.1% month over month, which is better than the forecasted 1.5%. This basically indicates that consumers aren't pulling back as much on their spending despite the high inflation. But I will say right now that is definitely subject to change as these interest rates continue to. Well, the first one hasn't even kicked in, so we'll see how the market looks come April. I assume that because the Nasdaq, I'm sorry, the Dow Jones Industrial Average was actually recently in correction territory, I believe that there will be a little bit more volatility to follow, especially as we uncover what is to happen with the market right now as far as the Russia-Ukraine crisis goes. And I will also add that another reason as to why the market rebounded in a sense is because they're saying on Wall Street that investors feel more assured knowing that Russia finally decided to open up talks with the Ukraine instead of complete, full-out, blown-out war. But I don't know how exact true that is, but we will see how that goes. But those tensions have been lessened and investors feel somewhat more confident. But I can't trust all of what I read from these sources because they're only telling us what they want us to know to try to keep us from mass panic and mass selling, huge sell off, because that would be detrimental to the stability of the markets.
Yeah, yeah, it would be. I think that it would be smart for people to consider what has happened in Canada can happen here. And by that, I mean the freezing of bank accounts. And so, if the potential is real, then why not prepare? Have some cash on hand. Cash is king. And also just put your money, probably somewhere in crypto. Just saying, not financial advice.
Yeah, yeah, I definitely have been moving, and actually, with I wanted to add to what you said earlier is that I've actually started rotating my money and additional gains to crypto, to more specifically my virtual personal wallet, because I want to have more control over my own finances than a bank to easily say, "Hey,
Yeah,
we're gonna freeze your bank account and your assets. We're just doing maintenance, or we just want to make sure everything's all fine and dandy. Thanks,
right.
okay, bye." No,
Yeah.
no,
Screw you.
yeah, 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 basically. So we want to be sure. And I feel much more comfortable knowing that I'm investing my own money and taking the risk. And there, of course, is risk involved with anything you do in life. But I know for sure that I'm making a decision in the better interest of my own morals, of course, as opposed to an institution making a decision on behalf of what they think is best for me. Like Robinhood deciding to force liquidate people's assets under the fact that it
Right.
was because of too much volatility. They're like, well, just for volatility purpose, we don't think it's best that you hold this asset, so we're going to force liquidate. Like, what? What? No, who are you to try to tell me and regulate my finances? But it is implied in their terms and agreements, which someone, of course, fact checked. But still, it's stupid. These sketchy business practices shouldn't be condoned, which is why the SEC is finally saying, I guess we should get more involved.
Right.
That's
Right.
terrible.
It's not regulations aren't bad, regulators aren't bad. They are natural. They are so natural. They just happen when you are in a society. So they are a force of good. They are let's not say a force of good. They're a force of nature that can be used good or bad, for good or bad. And as we see in a empire that appears to be deteriorating, they tend to be used for things that are not as good more often, but that doesn't mean the whole organization in and of itself is bad. Okay. There's a lot of government organizations that do really, really good stuff. And they don't get enough credit, especially right now. So I think that when we're talking about regulation in crypto, when we're talking about regulation in the stock market, and people want the government out of their pocket and regulators out of their pocket, one of the things that deters people from coming in your pocket is the government itself.
Yeah.
Right? Like there's laws to keep people from coming into your pocket and stealing your stuff. So it's just bound to happen, especially as we enter in this new world with the metaverse, which it's not really a new world. We're literally in the metaverse right now, guys, just in case you didn't know. Just in case you didn't know, we're there. Okay. Right now, literally, as we're doing this stream, this is the internet is the metaverse.
Yeah.
Anyway. So, but as the metaverse becomes more mainstream and people are owning digital assets and spending more of their time here, regulators are going to have to regulate that. So it's not going anywhere. It's not going anywhere. It's probably going to get more regulated. And I'm not saying more regulation is good. It's just natural. It's what happens. People want to feel secure. And a lot of people don't have the security in themselves to depend on themselves. And so they then require somebody else to take that burden of responsibility. And that's where the state comes in.
Well said. Well said. And I think we can continue to learn from the experience that we've all endured so far as recovering from the pandemic, as far as understanding what you're understanding financial literacy to a greater capacity is what's important too, especially in this kind of time. Once again, I can't enforce this enough. Just educate yourself. Educate yourself so
Yeah.
you know exactly what you're getting yourself into. Because when metaverse becomes more prominent and these businesses start migrating their business towards the metaverse and it becomes a more prominently used atmosphere, people are going to feel left in the dust. People are going to get lost. And then, of course, recklessness will ensue and more regulation from that. Of course, there will be opportunists, to say the least. And of course, there will be people that listen in accordance to the regulations that I'm sure they're drafting up right now as we speak, so they can ensure that this is a successful launch. Well, not launch, but successful, of course, uh, flow. But of course, there will be
You know,
cracks.
on a totally different note, I just remembered something that uh, I did before we did the live stream here for the podcast MOT Daily, which if you're unaware of, be sure to check those out. They come out every day, 7 o'clock in the morning. Anyway, they help you stay ahead of the curve with some world events, tech, crypto, etc. And so, in the episode that I did for tomorrow's show, I talked about the UK and Germany, Spain, and there was one more country, Florida. No, it wasn't Florida.
Florida?
I don't remember, but it was Germany, Spain, and some other country that flees me at the moment. Anyway, a lot of countries are talking about, this is a total change of pace here, but it's still with crypto, are talking about banning proof of work. And proof of work is a consensus mechanism used to bring these cryptos into existence, such as Bitcoin and Ethereum. But there's another consensus network called proof of stake. There's like 12, I think, consensus networks in crypto, but the most used are proof of work, proof of stake. The difference between the two is that proof of work requires a lot of computational power and therefore, a lot of energy to mine the cryptos. Proof of stake, you just need validators. They just need to hold their crypto. And then they generate more crypto. And so it's not as energy intensive at all, not even close. And so countries are trying to rein in on that. And MOT, we've been talking about that. Proof of work is, I think, still going to be around, but it's going to fade away as more and more countries and businesses become comfortable with the idea of proof of stake, because that's a whole nother thing to learn. It's way different than proof of work. And I think it's what central banks are going to use in part for their digital currency is a proof of stake network in some way, or maybe proof of authority, maybe proof of, I don't know. There's a couple other ones that we can go off on, but yeah. So there's something to consider when it comes to what you want to invest in for crypto. Do you want to invest in something that's on proof of work or proof of stake? Well, if the culture, the world, the zeitgeist as a whole is leaning towards renewable energy, etc., clean environment, why would they then go to proof of work? Why would they not go to proof of stake? And so I think you're going to see a huge shift to proof of stake. And so that doesn't mean Bitcoin's going anywhere. I think Bitcoin's still going to be the big name for a long time. But proof of stake will replace proof of work. It doesn't mean they can't coexist. But as far as what most people are using, it'll be a proof of stake consensus network.
I'm willing to see exactly what the future entails as that goes. I'm learning each and every single day as I go, especially as cryptocurrency is here to stay. And with your observation and of course your experience, I'm definitely interested to see all of the advancements as far as cryptocurrency goes and what these central banks decide to do as far as means to attract other people to utilize perhaps their currencies or perhaps any kind of crypto ETFs that they could potentially put on the market as well. So it's really interesting to say the least, and you'll undoubtedly see a blend of that. You already do see a blend of that happening on the traditional markets as well, when you can purchase Bitcoin and other cryptocurrencies on the traditional stock market. So
Yeah,
I'm here to see what the experience will entail for sure.
me too. And before we end this, I want to emphasize this point again, and I try to emphasize it in every live stream we do. It's so important as we're going through these shifts that you start to localize your supply chains and you begin to, I would say, prep a little bit for harder times. And by that, I just simply mean gas prices are going to go up probably. So why not get a couple gas cans? Fill up all those gas cans while the gas is somewhat cheap compared to what it's going to be maybe 2 months from now. Not a bad idea. My wife and I actually filled up all the gas cans we have. They're not at our place. So anybody who wants to come over here and try to be a gas can bandit, good luck. There's no gas cans.
Or also gas can bandit, or also get a gas card as well if you're thinking about. No, I'm not a financial advisor. This is what I've done that also helps me as well, is to get at least be incentivized. If you're paying for high gas prices, if you're going to pay for these high gas prices, at least be incentivized to do so you can make money and cash back from these gas cards that you're purchasing. Because if gas is one of your main expenses, or just gasoline in general, well, you might as well make something out of it, right? So that's another suggestion to throw out there.
Yeah, that's definitely an option. But the most important thing is to just be prepared, you and your family, for however long you guys think you may endure some hardships. It doesn't mean that like fucking Canada is going to be coming over here invading America. It doesn't mean like Mexico is going to be. It doesn't mean that. It simply means, or that FEMA, that the government's coming to your door, or that your money's going to be seized. Like, no, like just prepare for the inflationary times. It's not bad. It's not bad, because let's say you lose your job during that period, and you have what I like to call a savings of food. You have a food savings, or some would call food pantry, right? You would not have to worry about those bills at all. You would not have to worry about, how am I going to manage my money when I need to spend $300, $200 in groceries a month, if you had been saving up food, for a while. So like, it'll help ease some of your stress, I think. But yeah, anyway, I just wanted to touch on that one more time. Like, don't get caught up in the narrative that it's selfish for you to have a little bit more than you need at the time. It's important to take care of you and yours.
Yeah, seriously, save yourself. Okay. All right. We're going to experience a lot of price changes in our overall monetary system as far as supply chains go. When you go to the store, don't be surprised if you're paying more for what you normally buy as far as product goes, paper products go. Just be weary of the fact that the economy will change subtly, but gradually, of course. So just be wary of your expenses, your everyday expenditure, of course. I know you might find yourself cutting back on your expenses, but like you said, localize your supply chain, try to save yourself some money. Or if you can, go to an alternative store where you would get the same product, but for cheaper. Look for those deals. I mean, I'm a bargain shopper for sure. Okay. I'm not going to, if I know I can get something at a discounted rate, you best believe I definitely will. Okay. There's no shame in that. All right. I don't care how much money you have in your pocket. If you can save some money, save some freaking money. All right.
Right. Well, guys, it's been a lot of fun. MOT Finance, MOT Crypto. We'll have to talk a little bit about the name. I've grown attached to MOT Crypto, but MOT Finance seems a little more appropriate. But anyway, guys, thanks for coming in today. We appreciate it.
Thank you, guys.
Peace.